The higher time frame gives you a bias of what you should be doing on the lower time frame. That means if you get the higher time frame bias correctly, you're going to get a good entry on the lower time frame. In this video, I'm going to show you how to identify a good bias on the higher time frame, and as well, I'm going to show you how to execute on the lower time frame using a trade that I will take on Monday. But before we go into that, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to see content like this, I want you to smash the subscribe button and like this video. I'll be right back. I'm going to use this live trade example on GBUSD to show you how to trade on the higher time frame and also how to execute on the lower time frame. Now, if you're able to understand what price is doing on the higher time frame, you're going to have clarity on the lower time frame. And most times, you can likely use daily time frame as your higher time frame and 4 hours time frame as your higher time frame. Now, for me, I use both the daily time frame and the 4 hours time frame as my higher time frame. And the way I use it is by simply understanding how price is behaving on the daily time frame and market structure on the 4 hours time frame. And for me to do that, I will simply head to the daily time frame and understand where support is and where the resistance is. In this case here, for me to know where support and resistance is, I have to clearly zoom in and see where price is coming from and where price is heading to. Now with my eyes, I can see that price is going to the upside, but the trend has to tell you what price is doing for you to be able to have clarity. And for every trend, there's a support, which is what I just drew now, and there's always a resistance. This is the resistance. Now, for us to understand or interpret what price is doing on daily time frame, we can clearly see that price is simply heading to a support level. That means price has gotten to the resistance level and price is likely going to test the support level. Now, the bias here is this: price is in a downtrend or price is heading to support. And when price is heading to support, we want to follow price and head to the support level. And for us to do that, we want to simply identify the key levels. The key levels help us understand what we're going to be doing on the 4 hours time frame or how we're going to join the price to the support level. And in this case here, this place is simply our support key level. And here is simply our resistance key level. Our focus or interest now is to simply focus on these key levels and understand the market structure that price has created on the 4 hours time frame among these key levels. That means how the price move from the support key level to the resistance key level on the 4 hours time frame. That means I simply want to use market structure to understand where I'm going to join the price from. And if I look at this also at this point here, you can clearly see that price is simply creating swing high and swing low. This is a swing low, swing high, a swing low, a swing high, a swing low, a swing high, and price has currently taken out the previous low. And with this, whenever price creates or take out a previous low, there's always going to be a retracement to continue a newer low. In this case here, price took out the previous low. That means there's going to be a retracement into a supply zone to continue the sell. Now, having understand this structure, the next thing I want to do is identify that supply zone that price is likely going to retrace into to continue the sell. But first, let me identify this particular previous low that price took out. Remember, whenever price take out the previous low, there will be a retracement into a supply zone to continue the sell. In this case, a sell. Now, what I want to do now is to simply identify the supply zone that price is likely going to retrace into to continue the sell. And in this case here, we're going to simply identify all the supply zone we can see at this point here and be able to use liquidity and point of interest to understand what supply zone we're going to sell from. And if I'm to identify those zones, I can see that this place is the first point of supply. And here is the supply again. That means I was able to identify two supply zones from this swing high to this current place that price is currently at. Now, the next I want to do is to simply refine this zone to become point of interest and use liquidity to understand at what point I'm going to sell from, or at what point am I going to wait for price to enter before I sell. Now, if I'm to refine these zones, I'm simply going to refine this zone to become a point of interest here. So here is basically a point of interest, and here is the next point of interest. Now remember, we want price to retrace into a supply zone to continue the sell. In this case here, if you have to look at this point of interest here, for us to know if this point of interest is going to be the zone that price is likely going to trade into to continue to sell, we want to simply identify liquidity. And in this case here, this is where we can see liquidity, and there was also liquidity that was here, the price took out. Now, if you look closely below this POI here, there's no liquidity at this point here, but rather I can clearly see that price took out, price gave us a liquidity sweep here, price induced liquidity at this point here, meaning that price is likely going to come out for this liquidity at what point, but we don't know at what point price is likely going to come out to this zone here. Now, looking at this particular POI here, there's no liquidity at this point for this POI to hold. What this means is that there's chances that this POI is likely not going to hold. There's chance that this POI is not going to hold. Now, I want to simply understand how price behaved, why price was going to this POI here. Now, in this case here, when price took out this liquidity at this point here, that caused price to take out a previous low, price simply started giving us a demand zone, which is simply a drop, a base, and a rally. That means when price took out that liquidity, price gave us a demand zone here, and when this price expanded out, came back into this zone and we have this buy. That means this buy here simply caused a change of character. Why? Because there was no liquidity for price to hold this particular POI here. Now, when price caused this change of character, price also gave us a rally, a base, and this rally here. So this place is also a point of demand. This place is also a point of demand. As you can see, price also induced an equal high at this point here, meaning that price is likely going to come up to that point at one point or the other here. And again, price also induced equal lows at this point here. That means there's also liquidity at this point here. As you can see, price took out this liquidity first, and likely the price is heading to this other liquidity at this point here. So what this means is this: price in a downtrend, but there's about to be a reversal because price took out a previous old low that will cause a retracement to a supply zone that price is likely going to sell from. And looking at things, price is likely not going to sell from the supply zone at this point here. But if price does, that means I will simply wait for price to take out this swing high here, come into our zone, and then we'll continue a buy. So our entry on GPS is simply wait for price to open tomorrow, be Monday, probably buy to the upside, giving us confirmation that price is in an uptrend, and then we can look for an entry for a buy around this area here. That means on GPSD, we're going to be looking for a buy from any of this zone here, and probably target this swing high here, and maybe here as our stop loss, because we're expecting price not to take out this low here if price take out this high here. So an entry on GPSD is simply wait for price to open tomorrow, be Monday, and expect price to buy to the upside. That means if price open tomorrow, be Monday, we want price to simply buy to the upside, then we can have a retracement back into this zone to continue a buy. So the reason for this buy is simply because there's no liquidity for price to hold on this particular supply zone, but instead price is simply going to use this zone as a liquidity to trigger the next point of interest, which is simply this POI here on the 1 hour time frame. So this buy is based on the fact that I'm expecting price will likely come back into this other point of interest here to continue a sell. And the reason I identify this point here is because price took out this liquidity here, gave us change of character, came into this demand zone. I'm expecting price to continue the buys to the upside, taking out all of this liquidity that is here. The entry here is confirmed if price open tomorrow, take out these highs here, then come back into this zone, then look for a buy opportunity. That'll be all for GPSD. I will see you in the next video. Peace.